Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company this Monday afternoon on a day when we have seen markets perform fairly well. Of course, we woke up with news on Saturday that Wall Street had hit yet another record high on that US jobs report. We have had some machinations in terms of what's happening in Washington this afternoon, which we'll bring you in a moment. But I do just want to see where the local market is finishing up the day's trade, up 0.4%. Shrugging off, I guess, some of these earlier dips that we had seen coming through in US futures. Steve Sosnick from Interactive Brokers, though, saying that essentially US futures are reacting fairly calm to this news that US prosecutors have opened a criminal investigation into the Federal Reserve chair. Friday's jobs report, of course, still very much in focus. The yen also in focus with a possible snap election in view, and the US dollar falling by the most in around 3 weeks. Gold hitting a record $4,600 per ounce after we heard that news that the investigation was occurring into Jerome Powell, and Jerome Powell issuing a video statement defending the central bank's independence.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
All right, Jerome Powell coming through there, really just reiterating this momentum that he has done his job with integrity. Of course, what remains at the theme, though, is the fact that we are still likely to get Fed interest rate cuts, even though the Fed chair himself is under fire. And that is what's continuing to buoy this rally that you're seeing across gold, of course, that I mentioned has hit a record. Also oil, with Iran continuing to crack down on these nationwide protests. Gold really lifting a number of our gold players. Newmont's been up by as much as 6%, Northern Star up by some 3%, all adding to this Monday momentum that we have in the markets. And then, of course, spending spree as well, because we had household spending for November released, showing that we continued to open our wallets. In fact, spending increasing more than 6% in the year to November, to the highest level since September 2023. That's thanks to major events like the Oasis concert, sporting events like the golf as well, which lifted spending on services. And CBA's Harry Otley, who I spoke to earlier, said this puts February very much live. They actually think the RBA will kickstart the year just going out there and hiking interest rates straight away to really try and rein in, I guess, some of this overspending perhaps, and inflationary pressures as well. Let's have a look at some of the sectors that we are seeing move in the market today, and consumer discretionary looking pretty solid in the wake of those retail sales figures coming through. We also, though, have been watching very closely what's happening with these gold players, and I mentioned at a record gold. So Newmont up by 5.4%, Ramelius up 6%, Northern Star, Genesis also looking good, and continuing to monitor what's happening in the oil market as well. As I mentioned, Iran continuing to crack down on these nationwide protests. You've got Woodside Energy up 0.6%, Ampol up 2.2%. Elfrina Jonker was speaking to me earlier from Alfinity Asset Management. They're underweight energy in general, but have been buying into Ampol. You can catch that interview on our website shortly. Some of the other stocks that we're watching today, Light & Wonder hitting a record on settling this IP dispute with Aristocrat. Aristocrat also slightly higher despite a bit of a dip on the open. Super Retail hitting a 5-month low on a first half earnings miss. Suncorp and the insurers also in focus as we monitor what's happening with the insurance claims from the ex-tropical cyclone Koji in Queensland, and also from the Victorian bushfires. And Domino's shares higher, executive Merrill Pereira promoted as CEO for ANZ. Elsewhere, PWR Holdings, that was higher, secured a US contract. Findi set for its best session in over 2 years on an investment from Nova Global Opportunities, and Clinuvel, it's begun dosing in a controlled peptide delivery study. Let's welcome back one of our faves, Henry Jennings from Marcus Today. Left us for a little while. Hope you had a great break. Your thoughts here on what we've heard from Jay Powell today, quite extraordinary, but has there been too much market momentum other than the dollar and gold?
Well, Happy New Year, Juliet. Good to be back. Yeah, it's quite extraordinary, isn't it? I guess, we're seeing, Donald Trump and his administration doing what they do best, which is flooding the zone. Let's face it, we've got the distraction of Venezuela. Now we've got Iran. We're talking about Cuba. There's all the kerfuffle with the tragic events with the ICE in Minnesota, and they're putting more troops there. And now we've got this attack on Jerome Powell, which, to be honest, looks a bit dopey, to be quite honest. And, Jerome Powell's tenure finishes in May. Now, we're halfway through January. I mean, I don't know where the year's gone, Juliet, to be honest. But, Jerome Powell's only there till May. So by the time they get all the lawyers up on both sides, he'll be gone. But it does show, I guess, that the intent of the Trump administration is to rein in the independence of the Federal Reserve. And with that comes the promise for US households of lower US interest rates. And this plays into the whole affordability. Trump's talking about capping credit card fees. He's talking about, trying to get Fannie and Freddie Mae to help with the house affordability crisis in the US. We've got the same here, of course. But so this is all part of the master plan. And, there is an old adage saying, don't fight the Fed. Well, the Fed is going to be Trump. And if you fight Trump, you're going to get yourself into trouble. And that's what we've seen. And that's what we will continue to see. If you push back against Donster, you are going to be a very easy target. And let's face it, the market wants what the market wants. And if Trump wants 3% in interest rates and he puts in a Fed chief that will deliver for him, that will be only good news for the US market and global markets generally. So, I guess you could take it as a bullish thing. It's not bullish for Fed independence, but, to go after the head of the Fed for his building renovations costs, I mean, let's face it, he's making a rod for his own back, Donald, because you can bet your bottom dollar that the cost for the Trump ballroom is going to be massively blown out.
Yeah,
but I guess that's for another day.
Indeed. Now, when you say don't fight Donald Trump, where do we start to look for investment opportunities then, Henry? Because as I mentioned, gold at a record 4,600. I know that you still like the resources.
You just can't go past it, Juliet. Let's face it. You buy Australia for resources, you buy America for tech, and tech can't live without resources, whether it's critical metals, whether it's rare earths, whether it's copper, whether it's uranium. We are a global superpower in terms of the resource sector. And, we are just starting this commodity run. It's been going for over a year now, but I think there's plenty more to come in terms of this trade. And in times of uncertainty, when all this geopolitical risk is on the cards with Iran, I mean, if the US went into Iran and started military action against Iran, I'm not kind of sure what justification they have. Then, of course, you've got Greenland, even Canada with a poll coming up in Alberta. It's hardly a surprise that gold is at a record high. And, I thought gold would hit 4,000 by Christmas. It surpassed my expectations. Here we are at 4,600. It's only a couple of weeks, really, from the magic 5,000 mark, to be honest. Copper, sprinting ahead as well. So I think resources remains the place to be. Obviously, there's some question marks, I guess, at the moment over Rio and its tactics with Glencore. And we've also got BHP, which could then be forced into going back and having another look at Anglo. And we are seeing a little bit of a broker downgrade for Fortescue today, taking its toll. But the rest of the resource stocks are doing very, very well. While I've been away, they have done very well. My small cap portfolio very much skewed to resources, gold, copper, uranium, and funds of people that actually invest in those as well. So I've done quite well while I've been on holiday. I should go on holiday more often.
All right, drinks on you next time, Henry. Also, Linus jumping here. The government boosting
Yeah.
critical minerals focus as well. We're getting a lot of focus now on antimony and gallium as well. So we start to look at
Yeah.
maybe some of these smaller players, perhaps. I mean, I know Linus isn't small, but where are you looking?
Well, I guess the other thing to bear in mind with these rare earths things is Jim Chalmers is in Washington this week talking about rare earths. The Japanese are also making moves and talking about more investment in our rare earth sector because of the spat they're having with China at the moment. So that's still boiling away in the background. And of course, the Japanese have been long-term supporters of Linus. So I think there's plenty of upside in these rare earth companies. And, despite all the talk from the US in terms of shoring up supply chains, etc. The hard factor is that Australia still has a huge amount of rare earths. We're still a big strategic partner for the US. It is processing power that is important. Linus has that in Malaysia, and that is the most important thing because very few rare earths companies have that ability to process the way Linus does, especially at the heavy end as well and the dirty end. So I think rare earths, antimony, gallium, germanium or geraniums if you like, and lithium, all these critical metals, palladium and platinum, etc. They're all going to do well, at least in the next few months as we head into the beginning of 2026. So I'm still pretty bullish on the whole of the resource sector. Pick your metal. Even grotty old tin, Metals X is another one. They should be doing pretty well out of the tin price, which is looking good. And copper, if BHP said tomorrow that they were no longer interested in Anglo, no matter what Rio do with Glencore, you would see a big bounce in BHP. And that old adage that Koshi talks about, buy BHP at $40 and sell it at $50. Well, it's 46.80 or whatever it is at the moment. It could well be that if BHP talked itself out of Anglo and no legacy for Mike Henry, we could see BHP at $50, and then we'd have some decisions to make, Juliet.
Oh, we would indeed, particularly long-term holders of the big Australian.
Yeah.
What about energy?
Yeah.
Because while you're away, we also had what's happened in Venezuela, and then of course we've got a lot of concerns as well about Iran raising the possibility of supply disruptions.
Well, we've got plenty of supply of oil, haven't we? The world is awash with oil. There's a surplus, and they can easily turn the pipes back on. So the Venezuelan oil is an interesting conundrum because their infrastructure is so shot to pieces. It's also a very heavy oil as well, so it's not easy to process. So it's not just a matter of let's just start pumping Venezuelan oil, because that's not going to happen. And the US oil companies, although they're being goaded into going into Venezuela, boots and all, it's going to take a while, to say the least, but certainly sentiment. But the mere fact that oil has only blipped up a little bit really on the back of what's happening in Venezuela, what's happening in Iran, tells you that basically there is still a bit of a glut in oil. And as the world moves to electrify, China especially, the reliance on oil diminishes to some extent. It's still obviously strategic from an American perspective, but maybe from a global perspective, it's not quite as strategic. And the mere fact that it hasn't exploded, to $75, $80 on the back of all this geopolitical news, I guess shows you that there is going to continue to be pressure on the oil price because of that supply coming on stream. So, it's maybe a bit of pouring some cold water on the crude story. I know oil and water don't mix, but there you go.
Oh, Henry, you've got such a way with words. All right, just maybe a quick look at what else caught your eye today. I mean, there was Light and Wonder, Risk to Crash, Super Retail.
Yeah, I guess Light and Wonder was interesting because if you're going to fork out 190 million bucks and blame it on the person that's gone, that they violated company policy and stole Aristocrat's technology and some of their patents. 190 million is still quite a lot, but I guess that's a relief that it's over, because US attorneys can probably eat through 190 million in about a month. So I suspect that's good news. I guess just generally what was interesting as well was the market reaction to Woolies and Coles as well, talking about that price gouging inquiry. Woolies is up 0.8, Coles is up 2.4%. So, and also that household spending number, which was interesting. Of course, Black Friday and all the other things that were in November. But I still can't see the Reserve Bank raising rates. I think it would be pretty much shooting yourself in the foot from the Reserve Bank. I think they may talk a talk in terms of being tough on consumers, but realistically, I don't think they're going to be raising rates. They'll just keep them on hold for some time to come, and I think that's going to be the way of things for 2026.
All right, Henry, when do we see you again? When you're on the call? Is that Wednesday? No.
I don't know.
Oh, I'm trying to look at the calendar. I'm sure you'll be around again soon. We'll chat to you
I'm
again.
sure I'll be around.
All right.
You know me.
Thank you.
All right.
Thanks, Henry.
Thanks, Julia.
Henry Dunnings from Marcus Today. Getting back to stock specifics, the stock of the day was Super Retail, and Nadine spoke to our experts, Mathan Somasundaram from Deep Data Analytics and David Lane from Ord Minnett.
I don't know whether it's the nail in the coffin. I think it's just a bit of a reality check that we had a reasonable period for retail sales that probably beat the expectations of many analysts. And in terms of Super Retail, they've had their own corporate governance issues. They've obviously had management changes there over the last 12 months as well. Their sales, as you mentioned, were higher, but they came at the expense of promotions. So their margins were hurt, particularly in Rebel and Macpac.
But look, Super Retail is a really good business. I really like them. Management, I remember when I'm old enough. I remember when they bought Rebel, and everyone said that was going to be a basket case, and they absolutely murdered it. So you're not betting against them, but it's the cycle. It's not the first downgrade. It's the cycle. Even, the top, the three most favoured retailers was probably Temple & Webster, Premier, Super Retail, and I'd say all three have pulled back. These are cyclical stocks. It's nothing to do with the operations. They can be good, but if the consumer is under pressure, they're under pressure.
All right, let's have a look at the market leaders on an up day. Of course, Light & Wonder, we've discussed quite a bit why it was higher, up 17% to a record catapult. The gold stocks moving higher, of course, on this record high gold price. James Hardie also having a good day, up 6%. To the downside today, Mesoblast was down by some 7%. Super Retail also weaker by around 6%. Drone Shield, IAG and BHP also laggards there. Let's have a look at the small end of town, kicking it off with Manuka Resources, which had a good day, up 23%, and European Lithium as well. While to the downside in the small end of town, we saw these stocks under pressure. Well, tonight, no doubt, we're going to see very much a reaction to what we have seen with the indictment of US Fed Chair Jay Powell, the criminal investigation here, adding to tensions with the Trump administration. The NAB's Ray Attrell, head of FX, saying that Powell's had enough of the carping from the sidelines and is clearly going on the offensive. He went on to say the open warfare between the Fed and the US administration and the extent that you take Powell's comments at face value is clearly not a good look for the US dollar, which has, of course, fallen by the most in 3 weeks. We're also going to get FOMC member Barkin speaking at the North Carolina Bankers Association Economic Forecast Forum. And of course, whether or not that goes ahead with what's happening with Jay Powell will remain to be seen. Tomorrow, the Westpac Consumer Confidence Index for January coming through. Let's recap where the local market has finished. Still a good day, up 0.4% on the local market as we see the close of play there up by 0.4%, and then of course having a look as well at where the ASX 200 has finished. It closed up by 41 points or 0.5% to 8,759 points. That does it for the COB.